Welcome to the Profit Answer Man, Anthony Nitsos. It's great to have you join us today.
Thank you. I really appreciate it, Rocky.
And I am excited for the conversation and to learn from you. Can you share a little bit about yourself and your business?
So I'm the CEO of SaaS Gurus. We are a firm that provides fractional CFO and a bunch of other finance and accounting and back office strategy and tactics to tech startups. So specifically SaaS companies that are software. I founded it many years ago to work specifically in this industry. I am not first and foremost a finance person. I am a medical school dropout who ultimately ended up in finance as a means to help companies figure out how to make themselves better. Kind of in a way, I never left med school. My journeys through that have been through process re-engineering for manufacturing companies. I've also done ERP implementations, led those, for large groups. Also worked as a Japanese controller for a while, which was a very interesting experience. And a lot of what I learned from that and med school, actually, I use in my work day in and day out.
What was it that you learned from that?
Well, so from the medical school side of things, I learned early on, there was one of the reasons why I dropped out was the fact that we were making profits off of sick people. And, I had a real philosophical issue with that, deep, and still do to this day. And to that end, it was like we have created a sick care system, not a healthcare system, because we provide things that keep people to consume our healthcare dollars. And you can see this reflected in how much money we spend each year on healthcare. I don't want to go down that rabbit hole, but in the end, the program I got into was a little bit different because it really focused on preventive medicine and figuring out ways to keep people out of the medical system and thereby reducing costs. And so that preventive attitude of let's find the root cause and treat that, not the symptoms, is one of the first core lessons that I took forward into, the rest of my life and what I use today. So when we have a problem in accounting or finance or whatever it is, I'm not looking to, band-aid it. I'm looking to go back. How did that happen and how do we prevent it from happening?
I'm laughing because most business owners, the way they solve problems is they throw money at it.
No, I'm a cheap bastard. Excuse me. I probably shouldn't say that on TV. I'm a cheap bugger. So I want to spend as little as I can to get as big a buck out of it. First of all, I'm from Greek immigrants. So, let's talk about being, frugal. I grew up in that household. So, but the Japanese take it to like an art level. The reason why I studied Japanese and ultimately became a controller of a Japanese manufacturing company is because I grew up in Michigan and they kicked the living crap out of us for decades, right? Our automotive industry got wiped out in many large parts due to the Japanese competition. So I really wanted to understand the enemy. I really did. And I went over there and I lived there and I studied their techniques and ultimately came back here and worked for one of their companies. And they got really came up with the other part of this, which is that preventive piece. Prevent before you detect, before you control your quality. And you can apply those concepts to just about literally any business process that runs in a semi-repetitive or repetitive manner, like invoice collection or invoice generation or sales order creation or whatever it happens to be. You can standardize those things so that errors don't happen and you don't end up chasing and spending, precious human resource time and money on, administrivia and clerical crap and other things that get in the way of running your business.
It's funny. I remember back in the 80s when Japan was truly accelerating and going to the top of their game. Clearly that didn't work out perfectly for them. Tech was also going up. And I remember reading this story of a company that went to Japan and said, we want you to make these circuit boards. But here's the thing. We need a 98%, like you can only fail 2% of the time. And the Japanese are looking at them like they couldn't understand why they would accept the 2% failure rate.
Why it was so horribly that horrible, right?
Yeah. Why is it so high?
Exactly.
And yet that's not the American way.
Well, but see, that's the thing, is that I took that and said it ought to be the American way. It ought to be just the way. It doesn't matter what country you're in. Ultimately, in the end, you take the let's go after the root cause and treat that and not the symptom mentality and training. And you add to it the Deming's hierarchy of controls, as it's called, which is prevent the error from happening in the first place. Then, if you have to, use detective controls to find it. And if both of those fail, you have to have corrective controls and in an increasing order of cost to you, right? So The Japanese had this great phrase. It's called poka-yoke. People read it that way. It's actually translates baka-yoke, which is idiot cannot do. So it's the exact same idiot proof, right? So you create processes that humans can't screw up, and then it's rinse repeat.
So we have that here in America. Maybe I'll get in trouble for saying this. McDonald's.
Yeah.
Right? I mean, literally.
That's no joke. You are absolutely correct. You go to McDonald's because you know every time you go to McDonald's, that filet of fish is going to taste exactly the way it has before, and that's the way you want it. I happen to love filet of fish.
It may not be the way you want it, but it's the way it's always going to be.
Well, it's going to be the same. Well, okay, so they hooked me when I was like 6 and I had my first filet of fish. And, you know, here I am. I'm not going to say how many years later, and I'm still eating the damn things. All right. So it worked. But you're absolutely correct. It is the repeatability of process. And that's a huge amount of money that you can squeeze out of your G&A function that you can then use for sales and marketing, or you can use for, you know, research and development or product development or customer success or something else that actually builds the business. And that's like the tactical level stuff. Then the strategic level stuff is like pricing, or if you're going to take an investment round, what's your pre-money valuation? Or where I come in a lot is what I consider to be the true meaning of the word CFO. It's not chief financial officer. It's cash flow oracle. I need to be the person that can tell you. I literally had this conversation before this podcast with a team of 6 people. We're trying to figure out how to make this company profitable so that it doesn't need to take in any more investment money, right? And the only way you can do that is with a financial model that gives you the levers to like make all those changes and predict cash.
We just did an episode where we took 2 companies that were essentially similar P&Ls in the home space and showed how one cannot grow without a ton of cash and the other can grow indefinitely with no cash. And it's because of the timing of when the cash comes in, what the outlays are, when it all comes together. And that's the biggest thing. When I sit with my clients, I'm like, they're like, we want to scale and grow. I go, okay, let's model out and let's actually just beyond modeling out, let's figure out how to adapt your business so that it is that ladder business, that it can scale and grow without the need for additional cash because your clients are your cash flow. And if you can time when you get paid versus when you have to pay and you do it well, it's all golden. But most people don't even think about that when they do it. They're just like, let's grow. We'll deal with that later. No.
Cash flow. I mean, a third lesson that I picked up, you know, the first 2 were, you know, the medical school thing and then the Deming's hierarchy of control, was that you cannot spend net income. You can only spend cash. And sometimes our P&L statements are set up in a way that are in a way misleading. As you said, you can take a look at 2 P&Ls next to each other, but that doesn't tell you the cash picture. That just tells you what we call the GAAP, GAAP, generally accepted accounting practices, CPA speak for financial statements that everybody agrees are financial statements, which is really what it is. Just everybody's agreed that that's what it's going to be. Then there is cash flow. And I liken it this way. At one point, I was a CMA, a certified management accountant, and I later became a CPA, a certified public accountant. And they're 2 very different worlds. In the management world, it's all about cash, variable costs, fixed costs, how you're going to get over, you know, your nut. You know, it is definitely profit focused, cash left over for the owners at the end of the world, or at the end of the day, not the end of the world. And then this P&L thing was just something that you gave to the auditors.
And that makes a lot of sense. And here's the thing, and I want people to realize this. For a small business, predicting cash flow is not that difficult. I have businesses that are $10 million businesses, and they can predict their cash flow in about 15 minutes a month. We set up the systems, processes, and literally every month they spend 15 minutes updating the system, and we can sit down and we go, hey, for the next 6 months, cash flow looks great. Everything's good, you know, which also drives production, drives sales, drives where we need to be and where we need to focus. But it also takes all the urgency and scarcity and fear out of the entire system. It's like, hey, everything is thumbs up. We can keep going and we don't have to fuss about it. And I'm always just amazed of why people don't do it. I mean, why do you think people just don't do this? Because it's not hard.
You know, I think it's because people are afraid that they don't know how to do it, or they're going to look like fools trying to figure it out, or they're going to screw it up. Because ultimately, in the end, we procrastinate because we're afraid. And in this case here, by not doing a cash forecast, it's just a form of procrastination. It's something you should absolutely have, just like you should have a dashboard for your car when you're driving. Okay, you should have, a cash flow model for your business to drive it. And those two are indispensable. And I think a lot of owners don't get to it. One, it could be, hey, I'm too busy. You know what? Here's one example. I've got enough money in my bank account. I don't have to worry about it.
This
Right?
month,
I got cash, baby. I got them rolling in it. I'll worry about those details later. You know what? And for a few business owners, that works because their business is that profitable. They just make money but that's the exception. That's not the rule.
you know why else it worked? They just got a loan or funding and there's $1 million cash in the bank.
Well, okay. Now,
Borrowed money.
there are two worlds that I deal in. I deal in the bootstrap world and I deal in the venture-backed world. And those are two very different animals when it comes to cash flow management. In the venture-backed world, we need to know runway. When are we going to run out of cash and where we need to go out and raise some more equity funding or debt funding, whatever it happens to be. We're going to have to go out and bring in more outside investment. On the bootstrap side of things, it's how much working capital are we generating in order to do other things to grow the business or take a profit? But, in many cases, it's what are we doing to grow the top line? So that's why I said there's really only two metrics, really any business, in my opinion, after doing this for, too many decades to count, it's cash flow management and sales growth. And those are really the only two metrics that you should have like monomaniacal focus on to the exclusion of just about everything else. And you'll win.
Yes, and the end is each of those numbers can have 50 inputs that get you there.
Yeah.
And I think that's what people need to realize. It isn't just as simple as two numbers. It's having the systems and processes to capture everything to get to those two numbers. And that's what in the same way, we provide people with that dashboard. And for us, the dashboard starts with lead flow. How many people are interested in your business? And how many of those leads convert into sales? And then how many of those sales stick? And then at the other end of that thing is, when do you actually get paid for a sale? You get paid when they sign the order? You get paid 90 days after you deliver a finished product? Do you get paid every month on a consistent basis? Is it recurring rep? Like, there's a million ways we can play in that space. And you can build your business model however you want with the same kind of business. And I think that's what a lot of people don't realize. You can take the same business and build it 100 different ways.
Because we specialize in SaaS, there's actually a fairly unique set of ways of making it really efficient because of software and the nature of it. A lot of software as a subscription is prepaid in advance, right? Yeah, I can see your eyes light up already. Yes, that means you're getting the cash today for delivering the service over the next 12 months or whatever it happens to be. And that gets back to the net income ain't cash, and you can spend one and you can't spend the other one. So on a net income basis, I may only recognize $10,000 worth of revenue for that contract, but I just collected a $120K check.
So let's talk about that, because you might do that. But a lot of business owners, if they collect $120K, they go, oh, I got money, and they go spend it. And they forget they've got 11 months that they got to live off of that money, right?
Exactly.
And so you've got to, same thing, even in the trades, they get a deposit on a job that's starting in 3 months. You can't spend that money today. That money needs to be segregated and saved until the actual delivery begins and you've earned it.
Or or you're using it to buy raw materials in advance and place deposits on same. But yeah, it should be used just for that job.
Correct. Whereas a lot of people are collecting the money today to pay yesterday's bills, which is why they're always in trouble.
So now we go back to why the P&L actually is valuable. And it's not, I was kind of joking about it. It's like, yeah, cash flow is absolutely the most important one. But the reason why you want the P&L is that helps your diagnosis. The cash flow is really the result of all of those inputs, as you point out. But you can't really, you can analyze cash and there's ways to do it, but your P&L is what you really want to analyze. Where's my gross margin? Am I making enough? Am I above or below industry standard? Am I making enough on gross margin? And if you don't know what gross margin is, after being able to predict cash, this is the first accounting number you really should know and live by, because it's the cash that comes off of your sales activity. And that in our world, especially in the software world, that's what software is so highly desired as an investment category, is because gross margins for a software company should be at or above 80%.
And
And
that's a very
if you're
high
in manufacturing, you're laughing and falling out of your chair right now. I know you are, right?
and I get that. Prefer business owners look at gross margin versus sales. And the reason I do that, it's a mindset shift. Hey, this is what I actually have to run my company on. So you sell $100,000, and in your case, they've got 20% cost, so they've got $80,000 to run their business. Okay, we go to a manufacturing company, they get $100,000 in sales. Oh, I got a big sale. They got a 70% cost of delivery. I've got $30,000 to run my business on. And I think that's the key. How much do you really have to spend to run your business? Is it 80? Is it 30? And that's what gross margin tells you. And that's why I think you're correct. Instead of just looking at top line revenue, it's, hey, how much money do I actually have available to spend after I deliver?
So we have what we call the big five metrics, and I think these apply to software as well as any business. And the first one is your annualized revenue. What is your run rate? Okay, I'm at $1.2 million. I'm at what is your sales run rate? Immediately after that, what's your retention rate? Right, of your customers? It's way easier to get a repeat customer than it is to get a new one, because they're already in the house. You treat them right, you give them the right product, you do the right customer success. That's that net retained revenue that we call it. Right after your annualized rate, the net retained revenue. Right after that's gross margin. We need to know what your gross profit is, because it is the single most important indicator for your cash flow health in your company, in my opinion, bar none. The other thing after that's CAC, cost to acquire customer, because that shows you how efficient your sales and marketing effort is. Because CAC is very easy to measure. It's the amount of sales and marketing dollars, and this goes back to why your profit and loss statement has to be set up right, so you can pull that right out. That's what my sales and marketing cost is. How many dollars of sales and marketing do you spend to get a new dollar of business? New dollar of recurring annual business, repeat business, not just one-time business. That's a hugely important metric because it shows how efficient your sales and marketing effort is. If you get a new dollar of business for less than $1 of sales and marketing expense, you're ahead of the game. If it's costing you more, behind the game. It also depends on how long that customer lives with you. Is it a 3-year customer? So if I spend $1 to get $3 of business over the next 3 years, that's a pretty good return on investment, isn't it?
In your world, it is with 80% margin and recurring revenue.
Right. So,
But if somebody is a roofer,
that's different.
It's not going to work.
Because it's a one-time thing.
It's a one-time thing, and they don't have the margin.
Unless you build in, here I'll throw in my recurring revenue hat in the ring, you have some sort of ongoing annual maintenance contract with them.
Correct. And that is really where we get into the magic that we bring. It's, hey, you're a roofing company. How do I turn into a recurring revenue company?
Because it's all about recurring revenue. We're moving away from a world where it's buy it once to it's rented. Your software is a prime example. You don't buy Excel anymore and download it to your computer. Those days are long gone, right? You pay it as part of your Microsoft Office, subscription, and you get Word with it and everything else. Same thing for G. So we've moved away from a world where a lot of stuff is purchased one time to where it's basically annuitized revenue, what you just pointed out, recurring revenue.
And I'm shocked. There are actually people now who will rent their home heating and air conditioning system. Instead of buying the actual equipment, there are vendors out there that will now rent it to you.
So they come in and install it, and you just get charged a certain amount per month for it. You don't have to
month.
pay it.
Yeah.
Why not?
And you technically don't own it because you're renting it, which, it's bad enough when you have a bad month and you can't pay the gas bill.
I was about to say, how do they enforce
now they're taking that?
Does Vito come to the front door and break the lock to come in and grab it? It's like, how do you enforce that?
I don't know.
Okay, that raises a very good, I'll tell you what, though, that raises a really good point. It's called accounts receivable collection.
Yes.
Right? And what we just talked about was, okay, you can rent a furnace to somebody. Well, what happens if they don't pay the bill? Well, it's not like you can break the door down and come in. But with a recurring revenue stream where you are providing something to them each month, you have an off switch. You don't pay your bill, you don't get your software.
And, people do that in the car business where they have kind of these ignition locks. You don't pay your bill, they turn off the car.
I think I have to pay for OnStar to keep my Bolt running. The buggers have me by the short hairs. Yeah, it's like if you don't buy OnStar, maybe I'm an idiot, but you don't buy OnStar, the car won't run. And I'm like, what? So they have like a built-in $60 a month that I have to pay General Motors.
You shouldn't have to pay for
I don't
OnStar.
know. Like I said, sometimes I just, like I don't have time to deal with it. But it gets back to the point of creating a recurring revenue stream off of your one-time business is a huge strategic advantage for you cash flow wise, if you can do it. In the software world, it's actually the opposite. We want that recurring revenue on a subscription. We really don't want to pay for services. And the reason is that when it comes to valuing a business for either sale or investment, the reason why we're so focused on that sales number in addition to cash is our valuation is very strongly linked to our actual recurring revenue stream, not anything else. More than anything else, I should say, not anything, but more than anything else. So in the roofing business, it's probably like EBITDA or some other cash flow metric that would be generating, the multiple for evaluation for a sale. But in software, it typically is your sales rate.
They did that in the car wash business too, because now people pay monthly for car wash instead of per car
I know.
wash. And so the car washes that have monthly recurring revenue at a decent rate are selling, the curve is over, but they were selling at ridiculous multiples for those businesses because there was nobody there, so no employee and
Really high
recurring
gross margin.
revenue, it was just repair costs and real estate costs.
What you're telling me is really high gross margin.
Yes, high
High
gross
gross margin
margin.
businesses have higher multiples of revenue. Of course, that's the free cash
Yeah.
flow model. So it
Well,
all
and
comes back to cash. Again, it keeps coming back to the same thing. You need to manage your cash. And in order to do that, you need the systems in place to give you a way to predict it and analyze what happened. And I say I spend 80 to 90% of my time on Zoom calls interacting with my clients. It's about cash management.
it's like my favorite gym. They only charge $10 a month because for $10 a month you get to say you belong to a gym, and it's not worth the hassle of canceling. Just like it's not worth your hassle of canceling the OnStar. And so you just collect money without doing anything, and that to me is truly an ultimate business.
That is your nirvana when it comes to recurring revenue, is the customer who cannot be bothered to turn you off, and you don't have to do anything for them. It's pure gross margin. It's 100% gross margin.
It takes a while to figure out how to build that business.
And somebody asked me this the other day because I built a business and it is successful, and we have a lot of clients and they're really happy. So what he wants to do something similar, and I'll say number one, it doesn't matter what business you're in. Take the business metrics out of it. Exceeding customer expectation is the single most important thing you can control to increase your revenues. Not just meeting customer expectation. I got this from the Japanese. They're like, a merely satisfied customer is a bored customer. A customer whose expectations are exceeded is an excited customer, and they will tell others about you. And I've lived by that motto ever since, and I can tell you it works.
How long do you think it takes to grow with that kind of a model? Meaning, how quickly will people tell other people?
I'll tell you how it happened for me. So we found our niche, and we decided this was the niche we were going to lean into. And that was January of 2020 when COVID started, niche being the SaaS niche. Up until then, I'd done fractional CFO work for, many years, but it was like, okay, we're now going to lean heavily into this software world. Because one lesson I learned a long time ago is niche makes you rich. So become an expert in a niche and lean into it. I started off with 3 clients. We are now 4 years later. It's well over a couple of dozen. And our average contract value is nice. The amount of money that we make per client per year, I'm not going to disclose it,
No, that's fine.
is a nice 5 to 6 figures number. So you start multiplying that. It doesn't take many customers for us to grow our revenue. And it was all because in the beginning, I started off, I was the expert. I've had 2 unicorn exits in my experience, and both of them were here in Ann Arbor, as a matter of fact. Both of the unicorns in Ann Arbor, I happen to have worked on both of them and helped with those exits. And that right there, that experience of, yes, I know what it's like to take a company from 5 to 50 million and from 15 to 150 million. Those kinds of experiences, plus all the really small business experience, allowed me to just, when I come in, I'm not experimenting, I'm executing. And that's one thing I reinforce to my team and also my clients is I know you're paying me to execute, not experiment. In other words, I'm coming in to fix, cure the problems so that you don't have them. And anticipating questions. You remember the TV program MASH?
Yes.
Who can forget Radar, right? Radar would know the answer to the question before the colonel asked it. I channel my inner Radar at every opportunity. I'm trying to figure out what is it that my client is going to ask me. Before they ask me, I want to have that answer. And if they don't ask me, I'm going to say, you should have asked me about it, right? That being able to open up and surprise and delight them with something that they hadn't really considered before. That to me is those are the days I live for, because that means I've really done my job, which is I've exceeded your expectation. You didn't expect to know that. You didn't expect to learn that. You didn't expect to see that or whatever it was.
And, I think for a lot of businesses, the question they all ask is, how do I increase sales? And I think more often than not, they're probably asking the wrong question at the wrong time. That there are many other things they should be focused on before they ask, how do I increase sales? And they're usually asking that because they have a cash flow crunch. And so they think the answer or the problem is more sales.
It could be in the expense. It could be in the cost structure, right?
It could be a pricing, it could be cost, it could be your AR and your accounts payable. It could be a million things. It could be, and this is the one that is the hardest, inefficiency in delivery that you don't necessarily see. It takes us 5 hours to deliver this, and so we priced it for 5 hours, and you're busy running around and your people are taking 15. Where does that show up? Unless you've got systems to manage or know that, you don't see that kind of inefficiency in the system and that much time wasted. And it's all of those things. And that's why I say increasing the revenue may not be the question to ask yet.
No. And the other side to that is, do you have the capacity to take on increased revenue without sacrificing quality? The Japanese, again, standing up and saying, you know what? To your point about, is 2% failure rate good enough? And the Japanese are looking at them like, what rock did you just crawl out from under? We do 3 parts per million. Thank you very much. Right. And that's 0.9999999. If I counted them right, percent correct, not 98. It's the way I was taught to me was Sony. The original guy that started Sony, Morita was his name. And he was asking his team, what that failure rate was, and they had gotten it down to 6 or 7. He said, do you know what that failure rate is to the person who receives it? 100%, right? And it was like, we want 0 defects. And that mentality is more important than the actual achievement. You may never actually get to 0 perfection, right? But in the computer world, you can, because there aren't humans doing the calculations and programs. It's, a machine doing it, right? To the extent that a cosmic ray comes in and causes it to go blip, right? But you take that out of it, and that was the reason that Edwards Deming was such a god to the Japanese, is because he came up with that concept of prevent them from happening in the first place, and your defects go away. And then you don't have to waste any money looking for them, and certainly not a lot of money fixing them.
Which reminds me, when the Japanese run the auto lines, it is the frontline worker that has the power to stop the line. And when the frontline worker stops the line, all the managers run over and go, how can we help you?
Not quite, but effectively that's what happens is the andon light goes on. I think it's called the andon light. Boom. The line stops. They know exactly where it is because there's a blinking light on the factory floor saying, it's me who stopped it. And yes, they're doing that because they're saying, look, the part you gave me has a problem on it. Here's the problem. We're back in the chain. Did that start?
Mm-hmm.
And now let's prevent it. And that's the poka-yoke. That's the poka-yoke, which is prevent them from happening.
And that comes back to the concept, if you're not talking to the frontline worker and listening and taking feedback, you are the problem. And you've got to make sure that...
Rocky, did you realize that you were an Edward Deming's disciple? Because that's exactly what he taught. That's exactly what he taught. His ideas were radical. They threw him out of the United States. And, what's his name? MacArthur brought him over to Japan to say, here, rebuild this country. And he did. They have their top quality award named after him for a reason, because he taught the Japanese how to scale. Edward Demings is the reason why Detroit was able to flip the switch from automotive manufacturing to war manufacturing in less than 6 months, because Edward Demings had created statistical process control, came in and showed the Japanese automakers how to do it. And that's how the United States ultimately won World War II. We simply outmassed and outweaponed everybody else on the planet. That was the same guy that MacArthur said, come over to Japan and help me rebuild their economy after we'd bombed the living daylights out of it. That same economy that came back in the 90s and kicked the living daylights out of the American automotive industry because their products were better built, lower cost, and lasted longer. I still own a Toyota.
Well-made cars. That's
Yeah,
all I can say.
they're rocks, okay? You can
I don't
apply all of those techniques to your business. If you take nothing else away from this podcast, you can apply all those techniques, and they're not that difficult. Delight your customer, prevent things from happening in the first place, mind your cash, and sit back and watch it happen.
And I agree with you. It is a lot simpler. You know, it's funny. I was just at an event and it really dawned on me. Even when you show somebody how to do something in the simplest way that's guaranteed success, they all don't want to do it that way. They want to do it their way and run around. And I think for the business owner, making sure that everyone is following the system is the key to it. And we kind of talked about McDonald's. You don't go into McDonald's and go, can I have pizza? And the guy goes, yeah, we could make that. We'll figure it out. We have the ingredients. No,
They pay you to execute, not experiment.
not experiment. You execute. This is what we do. This is how we do it. This is our process. If people would like to learn more about you and your company, what is the best way for them to do that?
So we are software as a subscription, SaaS, SaaS, Gurus, just like, the Indian gurus, IO/lab, LAB, laboratory. Go there. There's free download. There's stuff that explains what we do. We are the doctors of dollars. We cure dollar problems for software tech companies. That's what we do.
And I love it. Thank you so much for joining us today.
Thank you.
Thanks for listening to this unedited video of the Profit Answer Man podcast. If you'd like to catch the full episode and learn more about what we do, check us out at profitcomesfirst.com. We also go through the Profit First book in each and every chapter in the beginning episodes of the podcast, so check those out as well. Thanks for listening, and here's to you having a more profitable and growing business.